Revolution is about to come in the taxation system of India. The government of India has recently passed the GST amendment bill in the Lok Sabha, as well as in Rajya Sabha, which was the main hurdle, that has also been passed. And it has also been learned that 16 states have already ratified, and it's now ready for signature by the President. And the Finance Ministry of Government of India is also ready to table the next bill with GST. A lot of questions are being asked about GST. It's goods and service tax. Basically, in a lot of countries, this is already in vogue, and in India, there were multiple number of taxes like central excise tax, education sales, service tax. Then in states there was VAT, there was luxury tax. So Government of India wants that the goods and service tax, it should be taken as one point taxation system, and all taxes should be combined together, and at one point the taxes to be paid by the businessman, and whether it is a merchant or whether it is a service provider or a manufacturer. So the GST Model Act has also been presented sometimes in June, July, and a lot of discussion is going on those Model Act also. So what has been done is that in place of goods and in place of service, the word supply has been added, and there are two type of taxes, the central GST and the state GST, which is being given in the definition of the section 2 of that Model Act, and then third one is the integrated GST. What government is planning is that when there is an intra-state sale, then two type of taxes, the central GST and state GST, approximately in equal amount has to be levied, and it is to be proportionately divided between the state and the center. For example, if the total tax is say 16%, then 8% central GST, 8% state GST is to be levied. The businessman has to pay 16%, but to be divided in two different heads. And in case of interstate sale, only one IGST is to be paid at the rate of 60%, which will be the sum total of the central GST and the state GST. And this is how the government is planning, and whatever the tax would be paid by the person on the receipt of supplies, that would be taken as a input credit, and that can be utilized for payment of taxes. So in fact, in nutshell, the effective tax to be paid is the difference between the tax payable and tax already paid. That would be paid, and the government is also interested that all these procedural matters and all these payment of taxes and all these maintenance of records should be maintained electronically in digital form, and the interaction between the departments and the trade should be minimized to the extent possible. So a lot of being is done, and government is keen that it should come in the next budget time, that is from 1st April onwards. But they are working hard on it, but they have a doubt that whether they would meet this deadline or not. Thank you.